man, I would say something like when I started in 2016, you had Trump in office, right?
Right.
And after that, you'd have him tweet. So I used to think that was messed up. Like in my mind, I'm like, how could someone manipulate the market like that? But then I got used to it because he would actually move the market. You follow me?
Right.
And then when he went away, we don't get the tweets no more. So the market trading is slightly different. You know, I don't think that it's any different than before. It's just the moves now are a lot larger. However, the volatility will slow down at some point. Typically when, like, from a chart standpoint, if we pull a chart up here, typically from a chart standpoint, we're trending down, right? No matter what chart you look at, or SPY majorly, right?
Right.
When we're trending down and we get bearish, you're going to get a lot of fear and a lot of these large moves. But then once we start going back from this downtrend back to an uptrend, I don't think the moves are going to be as large. And that's where people's going to get hosed on the stock option side, because look here, if we cycle this in right here and you see this low was at 372 and it took almost a whole year to get from 372 to 450, that right there is about 75 points, right?
Mm-hmm.
But when there's fear in the market, I can show you that the market drops from 430 all the way down to 448 in a month and a half. See the difference?
Mm-hmm.
So people, I feel, that get accustomed to trading these large markets that you see right here with us moving straight up and down, they're not going to do as good when you have these slow little steady up days and down days. You follow me? When we're back in an uptrend, you know? That's just my opinion and my take. How I changed that is that's why I became a scalper. You know what I mean? So when we have these little days over here where, look, check it out. SPY, 422, 424. Well, it's about 423. That right there is about $1 move. That's one day. Next day, 421. There's a $3 move. This day, 421, 423, $2 move. Here's another $1 move. The $1 moves are a lot more common, and you don't got like the fear coming in as you do right here. But every so often, I mean, the saying is they take the stairs up, meaning they go up, flight, up a flight, up a flight, up a flight, then the elevator straight down. So that philosophy is never going to go away. You know what I'm saying? Back to my specific question is that if I can make money in a slow market, I could definitely make money in a fast market. You follow me? However, if you can make money in a fast market or expecting the expansions to be extremely large, you're going to get hammered in a slower market because you're so used to seeing these large 2, 3, 4 point moves instead of securing your profits. And that's why I always say I'm going risk-free, because I'm so used to seeing those slower days, very much more, I would say, boring compared to the market structure now. But it's just, I mean, that's just my opinion on it. Someone else could be like, well, I have a different opinion. However, there's always a variable to toss into it. Like, people could say this is the Biden market, and it's like, the truth is, I mean, a lot of times, I believe you could look it up, is I think the markets are a little bit more stable, maybe, in one political party versus the other. You know what I'm saying? Just off previous data. So we never know what the future is going to hold. But I mean, the huge recession talk now, it's like there's always going to be news to instill fear at some point, whether it's war, like Trump, we had the bombing of overseas, like, you know what I'm saying? So we had the war talk. One day we bomb something or something like that, and then we end up limiting down. You know what I mean? And then we got the party in now where it's like we got to deal with the Russia war. So it's like at any given time, you could say, well, Russia just sent off 5 bombs, and you'll see SPY fall $2 or $3 or $4. And we can't control for that. So how we protect ourselves is that term that we always say, proper risk management. You follow me?
Right. Thank you.
Yep. So, I mean, even today, I mean, in the beginning, SPY was in a box, but did we end up expanding out or did we not?
Yeah.
All right. Before the market opened up, what is our momentum shift doing right now?
Pointing up.
Yep. And then before the market opened up, what is Boogie doing?
Is Boogie the orange? Sorry, I don't.
Yeah, boogie's the orange. So when the orange is below the red, that we're technically down. So if here we're up and here we're down, what holds more weight to you?
I would say boogie.
You would say boogie?
What? Sorry, I'm not so good at what boogie and spike or the other one does, but go for it.
No, I'm saying, I mean, it's there's no right or wrong answer. You know,
Okay.
some people only trade into momentum shifts. Some people only trade the trend that boogie does. You know what I mean?
Mm-hmm.
So then it's like, how do you come down here? So like this morning, we're almost at like a stalemate because our SPY crusher was in an uptrend. So to me, the SPY crusher holds a lot of weight. So if I know SPY crusher is in an uptrend, I'm probably going to follow suit with the momentum shift to the upside and not so much as boogie, because then I see the orange line is starting to hit that 2 o'clock range. You follow me? Which a lot of times could lead to a potential reversal. And that's exactly what we got, right?
Right.
But before that happened, it's easy to see now in hindsight. So like what I look at is I look at like, well, if we're opening up here and our most recent market structure was over here, and we use our RSI tool to create our structured market highs, we have a high here, and we have another high right here. So coming into the market, what do we say? If it breaks this, you could take a breakout, and coming into the market, we actually broke this already. So our next breakout would be right here. And what happened coming out of the gate? Did we break structure up or down?
Yeah, up.
We broke it up. So with the momentum shift up, right? And my structure down was right here. If we broke to the upside, as long as we stay above this 393, I think we're going to go. We're going to be pushing to the upside, right?
Right.
Then what do we got? We got a reset, and then we started trending back up. We got a butter call at this point. If you come down here and look at our RSI tool, what do we got right there? We got another low. So now you're going to remove this low, and you're going to bring it up to this right here. Are we still in an uptrend or are we still in a downtrend?
Yeah, uptrend.
We're still in an uptrend, right? So now we got a signal right here to take a butter call. Down here would be our stop out. Why is my stop out going to be right there? Because that's an important market structure. Here would be our call. And then what? 3 minutes later, we end up hitting our target on this butter call. Agreed?
Mm-hmm.
So now knowing we're in an uptrend, we get a reset here without even knowing what's happened. So then I'll put a line up here and I'll say, well, I know that SPY crusher is still in an uptrend. I know that the momentum shift is looking to widen. I know at this point right here, when we got this reset, which will be right here, we got this reset. My orange line is very, very close to crossing. Agreed? Right?
Right.
So then I said we could take a breakout right here. We don't know if it's going to win or lose. Price violates it right here. Well, now you're in profits. You could be risk-free. Now you're break even. Now you're back in profits. Now, bang, it goes up here and really expands. So then, are we still in an uptrend or are we in a downtrend still? We're still in an uptrend, right? So now we took this breakout right here and we got a winner, which I wouldn't have held through this news, right? And then news came and I put a line up here because I was like, well, I know that the news high is here, the news low is here. If we break this point right here, it's going to be an important structure to the downside. Instead of us zigzagging to the upside, I try to paint a picture in my head. So like right now I see this. This is what I see. So I know that if like this should go up here and then we come back down, I know that this is an important structure. This is an important structure. And then what happens? We don't know yet, right? So I paint a picture in my head of what I think should happen, and I just wait and be patient for something to happen. Well, we don't get nothing yet. All right, guys, we got another breakout. Well, I'm not taking it because we're overvalued. Well, that's fine. At this point, when we said take this, I know that boogie is bullish. I know momentum shift is bullish. I know that SPY crusher down here is bullish. Now we have everything in sync, and to me, that's the strongest signals, right? Then what happens right now? Did we go up here and expand to the upside again on this breakout?
Yes.
You see that? So then you come down here and we can delete all these blue lines. An important structure for me would be right here. And does it always work? Absolutely not. So now I see that we have an important structure low here. So then my structure went from here all the way up to here. So if this fails, I would take a breakdown and I would potentially say, well, I think the trend is going to be over. And then it makes sense because if we break this, right, and we may not, because if we break this right here, I'll take another breakout, but we failed to do that. So now we have a high. Now we have a potential lower high. If this goes down and breaks this, I think we want to start trending back to the downside. So for how long and how far, that's the $1 million question. But who's to say that I've taken one breakout right here and got a winner. I've taken another breakout right here and got a winner. You're taking another breakout right here, and then you got another winner. So really, you got you got 3 winners just taking market structure breakouts and breakdowns. And we may get another one here. You know what I mean? Who knows? So to me, it doesn't matter if we're in a slow market or a wide market, or I should say a volatile market, because the only difference is that in a slower market, you may get a breakout rate. We'll just say a breakout right here, and it may take 15 or 20 minutes to give you this little move. But then you may take a breakout right here, and in a more volatile market, you may get that same move in 1 or 2 minutes or 3 minutes. You know what I mean?
Right.
In the end, if you have your plan in concrete, it doesn't matter if it's volatile or not. But what you do have to remember is this right here. If you're taking a breakout right here and you're using this down here as your stop out, look how large of a loss that you're willing to give it. That means that you have to hold this trade way up here in order just for you to be risk-free. So for me, when we get fairly extended from our previous structure, I really don't like to take them as much. And if I do, I'll risk a lot less. So like if I normally trade 5 MESs or 1 ES contract on the future side, I may take 1 MES here and still take this trade because I like it, and know that if I take a loss here, I may only lose $100 or $150. But if I take 1 ES contract, that same loss now is $1,500. That doesn't match my risk to reward trading plan. You know what I mean?
Right.
Because if I'm constantly making $100, $200, $300, $400, $500 per trade, I can't lose $1,500 or $2,000 on one trade. Right. I mean, that comes back to being a defensive trader and really understanding what you're going to risk in each individual trade, if that makes sense.
Yes, it does. Thank you.
Yep. You got anything else for me, or are you good?
Oh, no, I'm good. I'm always learning.
Hey, we all are. You know what I'm saying? All right. Well, that leads us into our next thing. We're going to do a class real quick. So
I was going to say, were you still recording?
Yeah, we're recording right now. What's up, Steph?
Oh, no. I was just going to say, somebody needs to get their cut. I didn't know if you were recording or not.
Oh, here we go.
All righty. Let's go. Fast.
You got your camera on, Brandon.
Yeah, I know. We good this time.
No?
You're looking so handsome, too.
We never get to see you anymore.
Hey, you can see me right now, baby. Let's go. All right. We're running through class real quick, and then I'm going to give you guys your day back. This is your first time in here, welcome. And if you're on the Freebie Friday, I appreciate you for your time coming in here. I'd say give me about 15 or 20 minutes, and then we're gonna run through it. Steve, where's your camera at, bro? All I see is your eye.
I've got a yellow sticky note over my camera. Thanks.
Oh, here we go.
You want to see it?
You must not have shaved then. You know what I'm saying?
Nope.
All right, we good. All right, so first chart here, we name everything. This first chart is called Butter, Beast Mode Butter. There's 2 different techniques that we use to trade on this. If you ever come back and trade with us live, we do trade Monday through Friday, pending the markets open. This Monday coming up, it is closed, I believe, for Martin Luther King Jr. Day. Yeah, so we'll be back Tuesday, right? So if this does interest you, then just never hesitate to reach out. Send me a message. You can send us an email, whatever you want to do. This will be uploaded as well to the Zoom, and that's where you could be watching as well. All right, first one, Beast Mode Butter. The most common technique we have 3 sets of rules. We have our momentum shifts that need to happen to the upside, or momentum shifts to the downside that need to happen. Second thing that needs to happen, if we get a momentum shift to the downside, we take our first red arrow. If we get a momentum shift to the upside, we take our first blue arrow, right? Then The third thing, if we are trending down, we'd really want this trend line to be red. And if we could take a call and our momentum shift is pushing to the upside, we'd really want it to be blue. If all three of those things are in sync, you'll have about a 75 to 80% winning rate over time. And if you use proper risk management on every trade, that is what's going to put you onto the green side. And as a day trader, what more could you ask for? So what does that look like? Unfortunately, we can't trade in the gray box on stock options, but you could trade ES futures, right? So something on the future side would look like, well, we got a momentum shift to the downside. We would take this short right here. We'd put our stop out at the previous structure, and then we'd measure our move, and we'd have a take profit where we'd go risk-free. If you incorporate letting runners run, you're more than welcome to do that. On the flip side, to the upside, we'll show you something in a live market. We got our momentum shift to the upside. We never know what's going to happen. We have no crystal ball. We just trade the probability. We stay consistent to our plan, and we use proper risk management, right? 1 minute comes in. Brandon, you taking anything for a butter call? Nope, we did not get nothing. Brandon, you in anything? No, I am not in anything right now. Well, guess what we just got? What did we say? Our line's blue. That's 1 check. Momentum shift happened right back here is 2 check. And what do you see right here? That's our 3rd check. At 58 seconds on that time clock, what you just saw, I initiate my buy so I could get in at this candle's close or the following candle's open, right?